have panelists for this topic as Ashok Mittal, MD and CEO of Prest Loans.
Co-lending has taken a new avatar post-COVID. That is when a lot of the tech changed the way they were doing business. The co-lending really got escalated from there. Most of the companies felt, I think they need to look at a new business opportunity because raising funds was always an issue even today as we speak for smaller NBFCs. And the pros and cons of co-lending business and your perspective, Ashok.
Hi everyone, thank you so much. I don't know why every time he will ask the first question from me only. So, my name is Ashok Mittal. I represent a company called Prest Loans, which is a NBFC company based out of Delhi. We do small ticket business loans, which is MSME loans. We also do a bit of electrical vehicles, but that's not really very large for us. Incidentally, we are a company which is leveraging this product called co-lending very heavily. In fact, either co-lending or BC to that extent. One thing he has actually missed out while explaining the cricket. Now there is T10 also. So let us see who are the new entrant we are going to have in the market who will play T10, and we don't know what rules they will set up for this game. However, let us understand the co-lending aspect and pros and cons and who are the major players. So like he has explained in the cricket terminology, in terms of players, there will be a larger player which is typically a bank, and the smaller player may be NBFC. So the relationship can be between a bank and the NBFC, and rules are quite set by RBI where the sharing is minimum 20% from the NBFC, anybody who is tying up with the bank, and 80% can be done by the bank. There is another relationship which can be co-lending between two regulated entities, which means between two NBFCs also. While the set rule for NBFC to NBFC is generally, let's say, 80-20 only at least, but we have also seen some cases, some examples where this ratio can be lower sometimes. So because there is no written guideline from NBFC to NB perspective, so sometimes some NBFC are able to do it for a ratio which is lesser than say 20%. So they do 85-15, 90-10, you can even think of 95-5, etc. So co-lending between two NBFC can be different. Incidentally, fintechs are not able to do direct co-lending per se with the banks or NBFCs because they are not, say, regulated there from that perspective. So they have to go through a digital lending or LSP model where they are loan service provider or lending service providers. Now, broadly looking from pros and cons perspective, I will say with some experience that anybody looking to do co-lending with the banks, the journey is little difficult in terms of their policies, their processes, their tech integration. So it's little longer journey in terms of getting into that relationship with the bank. However, once you are set up and once you are doing the business, once you start it, then it is good for you because the lines are not an issue, the rate of interest are quite good, attractive, so it's more profitable. But you have to be very, very compliant as well as have some patience in terms of doing that process. If you're doing it through NBFC to NBFC, then the process is comparatively faster. Your co-decided policies of underwriting policies or SOPs can move a little faster. And best part is between two NBFCs, the tech integration can be faster. Although I will say that I have learned this word called API. So it looks very easy and attractive, but actually implementation of that is a bit difficult. But still, you can look forward to doing those APIs a bit faster. You can do in maybe a couple of months' time. So I will feel that this is the biggest difference when you look at doing any co-lending with a bank versus with a NBFC. Other than that, of course, from rate perspective, or the banks are far better, cheaper from that perspective. So these are like broad two differences. There may be little bit smaller differences here and there as well, but I think these are the two parameters which you look at. One will be from your pricing perspective, second will be how you integrate the technology, processes and policies. Thank you.
Thanks, Ashok. I think a nice perspective. While I say challenges, one of the most critical challenges in a co-lending model always remains the collections. Who collects the money? When I say 80-20, the model is very different. The banks, the big fathers always have a different say. The guys who own the 20% are the major stakeholders. So it's very challenging. So for me, while I'm in the lending business, the most critical factor is the collections. So we have a senior again, Ashok. Definitely, I think you have a different perspective on collection because you championed that business very well. Your perspective.
Before we speak about collection, it is important to understand why we are talking about co-lending, right? Why we need it. So, like banks will need because they have got money, but they don't have access to the customer. NBFC does not have that kind of money. They want to leverage more, so they will do it. In a way, they own the customer, right? So they have, the way we do it, we source the customer, we underwrite the customer, we service, we collect, right? Now, like he has explained, mostly you will have a escrow account for repayments of all the EMIs or loan repayments in the escrow. But there is also a method where normally the bigger lender or bank will say, why escrow? You please send the money in my account and then I will distribute further sometimes. But mostly it will be, let's say, common escrow account where the money will go. Now, the biggest challenge, especially people like us, where we are not into completely digital mode because we do secured MSME loans in tier 3, 4, 5 towns, villages where the customer is not so much tech savvy, does not have so much of understanding about technology in terms of making payments digitally. We also do bit of electrical vehicle loans, which is typically e-rickshaw, e-auto, etc., where the driver is not tech savvy, he wants to give the money only in cash. So the issue becomes whose responsibility is to collect money. Obviously, in all cases, invariably, the big brother will not take that responsibility and they will say, you have to be responsible because it is your customer. So it is our responsibility, the 20% or smaller partner who is owning the customer should collect the money. There is no second thought, no doubt about it. And the money should go to escrow. For small loans, the challenge comes when the customer is not digital and especially if the customer has delayed or defaulted in the payments, you will try to collect money whatever way it can come. It does happen with us that customer gives you cash. So, and you cannot deposit cash in escrow account, right? So that's the big problem. Effectively, you will have to tie up with a payments bank or maybe take money in your bank account and then transfer to that account. So it's little hassle in terms of operations. But when you look at the advantages, which I spoke, why customer does it because if the customer would have taken money only from NBFC, this would have been slightly more expensive versus if it is co-lending, the weighted average rate is slightly lower for the customer, he gets better rate also. So one is collection has to go to escrow if it is not digital, if it is not through NACH, if not through check, and if it is cash, then the money has to get transferred. That is one thing. Responsibility wise is the same thing. I'm sure there are some NBFCs here, right? For an NBFC, I feel there is a big risk on cash flow, which sometime we have faced. That is when the money lies with the, say, lender and you need to collect, the money comes to you later, right? It's not necessarily that it is coming on a day-to-day basis. Sometimes it's weekly arrangement, sometimes it is monthly arrangement, so it comes to you a little later. Sometimes you need authorization from the lender to make payments to you, right? So if you have to depend on the lender to get the money, then you will always be dependent on them and there can be delay in terms of collecting the money. The good part for NBFC is that the ownership of customer remains with you. So for all future requirements, we say top-ups or new loans, or if they give you references, if you have anything to be done, that still remain with you because you are owning the customer. So that way the value which you create for the customer or for yourself is higher versus the big lender who has contributed 80%. So they only remain the financial partner in terms of the entire transaction. So they do not have interaction with the customer. Hence, for you, it is a good thing that you are, in a way, that you are responsible for collection as well, because that increases your interaction with the customer. So I guess while everybody has spoken about challenges in co-lending, but you will not find any NBFC who will say, I don't want to do co-lending, right? So I think it's far bigger opportunity for NBFCs to do co-lending because it gives them opportunity to serve more number of customers, to increase their customer base, to increase their product base, and to leverage their balance sheet better. So it's far more profitable business despite of all these challenges which people have spoken. Nevertheless, the business under co-lending has increased and it is increasing. Over a period of time, even banks have moved a lot in terms of understanding how co-lending has to be done versus what it was, say, 3, 4 or 5 years back. So I guess it's far bigger opportunity than the challenges which you have. Operationally, you will always have challenges, right? I have not seen a customer or your internal team member who is not unhappy with your operations team, right? you are always saying my operation is not so good. So you have to deal with those smaller, I think, operation issues. But co-lending as a theme, as a product, as a philosophy is great. And I am sure that this is going to be far bigger business opportunity, especially for NBFCs to grow their business and for the customers.
Yeah, I think good insights, Ashok.
Thank you so much for sharing your experience and knowledge with all of your fellow mates. And our third panelist, Avinash sir. Ladies and gentlemen, we gather here to celebrate the excellence, innovation, and the remarkable achievements of individuals who have made a significant contribution in their respective fields. Get ready to be inspired as we spotlight on the brilliance and celebrate the power of human achievements. Without any further delay, let's begin the festivities. Next category is Best Upcoming NBFC of the Year goes to Prest Loans in the same category. Congratulations, sir. Thank you so much for all of you joining with us. Sayonara, this is me, Navya, signing off. Thank you.